Hi, this is Brent with Trade Therapy. Welcome to the Trading Couch. We are talking about Marathon Digital, our Clarity Spotlight this past week, and why it's such a critical name in the crypto beta rotation. Not because it leads technically or fundamentally, but because of what it represents, which is late stage rotation, a rising institutional risk appetite, and the transition from these endless reaccumulation phases into a confirmed uptrend across the entire crypto equity space. We'd covered Mara before, most recently in January, when we spotlighted this reaccumulation phase that had held this name in check for well over a year. The chart was inefficient underneath it. We talked about how price had been stuck in this drifting range for so long, it created this clear vulnerability below that. And that's the type of setup that always invites one last shakeout, setting a final spring here. While leaders like Coinbase and MicroStrategy were preparing for their breakouts, Mara was setting up for a final spring underneath this range right here. And if we look at the annotated chart from that January coverage, you could see that we anticipated this backup into the prior range lows here. This is classic secondary wave behavior. If we look at the initial impulsive wave coming out of this low here, we were looking for the completion of the second wave. And so institutions weren't chasing here. They weren't moving into a long position here. They were setting traps. And so this was their final trap that they had set right here, looking to take out all of the late chasing retail investors. If we fast forward to June, same chart, we see that we did get that back test of the previous lows into this inefficient range right here. But what's really important is what didn't happen. What didn't happen is we didn't see Mara break down. We didn't see a high volume failure event, but volume stayed contained, support held, and institutions stepped in to defend their positions, their long positioning. So profit was being taken in names like Coinbase and MicroStrategy, and some of that capital was flowing into the higher beta assets, the higher beta corners of the crypto trade, which is miners like Mara. So by mid-June, we were watching for a potential move up into and retake of all of these exponential moving averages that had all bundled and flattened right here. As we went into June, we were looking for a move across this resistance above the moving averages and retaking the 618 fib level. If we fast forward to the July chart, this is a clean weekly chart, but if you look closely, you can see we did get that jump across the exponential moving averages. We did it on expanding volume. This isn't passive participation. This isn't retail stepping in and deciding to support Mara in this latest price move. This is targeted re-engagement. Institutions are signaling renewed interest in high beta exposure. We're no longer looking at an extension of this base. We're now looking at a constructive looking move across the moving averages. It's important to note, though, is this one more back test of these moving averages before we see a new lower low here? Or is this the lockout rally that's about to start here? From an institutional strategy standpoint, it's important to understand that breakouts aren't green lights, they're tests. It's when price jumps above key moving averages, that's the test. Institutions aren't interested really in buying there. They're interested in defending their earlier positioning, and that may include defending a moving average. And if they don't step in and defend it, that tells you everything you need to know. Which brings us to the daily chart. If we look even closer, we see a really strong change of character happening. We see a strong change of character candle on July 2nd, where these longer candles previously were testing these falling moving averages from below and were being rejected. We're now starting to see these stronger change of character candles happening on top of moving averages and using those moving averages as support as it pushes away from them. We're now seeing price back test rising moving averages, which is a change of character. This is what mature transition looks like. We're no longer in a testing support range. We're starting to push off of support. When you see this kind of setup in multiple crypto equities paired with Bitcoin pushing its higher fib levels, an all-time high, and Coinbase breaking out of its multi-year base, and pushing all-time highs. This is not noise. This is not retail. This is the middle innings of the crypto cycle. And this is what it looks like when institutions shift from loading to deploying. So we're going to be keeping an eye on Mara as Bitcoin extends up into its higher Fibonacci levels. We're going to be expecting Mara to move up into its higher Fibonacci levels. If Bitcoin begins to fail or if momentum starts to cool, expect Mara to be the first equity to show some kinks and to show some sensitivity to Bitcoin potentially losing some momentum. Otherwise, we're not going to be chasing here, but we're going to be managing it like it's a late stage rotation play. That means honoring our stops, moving our cascading stops up with price as it advances, being responsible with our risk management and protecting profits. It's just as important as making them in the first place. We'll be watching that as this broader cycle unfolds. That's all the time we've got for Mara this week. We'll see you next week.